All right, guys, we're into middle November 17th. We've got a couple things going on. We're trying to take this, for those that are going to watch later on recording, we've got the guys here live that are inputting some of the ways that they tell themselves or give themselves a bias of where it's going. We've worked really hard through all these sessions in track 3, 4, and 5 to give people the better ability to trade and actually execute, okay? At some point, you want to get good at also creating a healthier bias and telling the story and knowing when you're wrong with that story. And we're going to try to kind of isolate that. We're not going to do it in one session, but it's kind of a transitional moment I come up with after reading a couple emails of newer people to the edge. One thing about newer people to the edge is you're not going to understand this in a week. You're not going to understand exactly how the footprint is read and how all this stuff happens in a week. I don't know how long it's going to take people to understand it, but this is two things. This is not conventional wisdom. If it was, it'd be easier to understand. It's unconventional ways to learn a market or to learn to trade, because it's a very different business than you're used to. And if you want conventional wisdom, you're going to follow in the high failure rate of this business, which is in the 90 percentile. People who try to do this just donate. If you want to be in that percentile, do what they do. Learn what they learn. It's opposite of what you thought would work, right? That's why after you buy it, you're a seller is such a popular saying, and people never thought of it that way. So trust me when I tell you, after talking with people from the retail space and side of things for now as long as I have, I know and I'm able to relay the weakness of it back to this group. And then being in a prop firm, being on the floor for 15 years total, I mean, it's just like I got both sides of it. And that's where my value is. And so when I tell you that everybody tries to learn how to create a bias and never learn how to actually trade the story, they're backwards. We've talked about, whether it's in a chart pattern, in a micro sense, on how to execute, how to actually trade the story. Then we'll work on the story. And anyone that might think, well, I want to know how to tell the story first. No. If you want to have a high percentile failure rate, then yeah, learn how to create a bias. Market direction guys are a dime a dozen. Guys who are good at actually calling direction are a dime a dozen. You don't want to be a guy that's good at calling direction and crappy at trading it. You won't make any money. So they're a dime a dozen. Calling direction doesn't matter. Trading it does. Now, I shouldn't say it doesn't matter. It does matter. It's just you shouldn't learn it first. So we're getting into story building and not telling your kids stories at night so they fall asleep, but being able to, in a non-complex way, how you create a bias. Could be something simple, could be something complex. I could care less. Could be fundamentals. It's like this. This is what I'm looking for. Last week, I don't care if you traded this or not or executed on it, doesn't matter to me. Because if you make money, I don't get to share in it. But if I did, I guarantee you everybody would be contributing. Now it's just most guys telling me how they tell a story. But the point I'm trying to make is if last week, 2 weeks ago, you were to say to me that with Yellen's comments in front of Congress and the strong unemployment report that you had an overall bearish outlook from a medium-term standpoint, that's great. That's how you created your bias. It's bearish. I don't care the time frame. It's bearish. And I don't even care that you were right. We talked about it, and we were right. That doesn't matter either. But that's at least a good way to frame how you created a bias. You might have executed it on certain days from the short side, whatever. That's a fundamental way to create the bias. Now, you could narrow that down and say, you know what? I was trading the opposite reaction where we had a strong economic report and we couldn't go up, so we were bearish. And that was that Friday unemployment report. That's an intraday, more micro sense of how you created your bias. Didn't ask how you traded your bias. There's videos and everything else that's important to know that you have the skill. I guarantee you most people in this room and in this meeting don't give themselves enough credit for what they know, unless they never reviewed anything. If you guys never really reviewed any of this stuff, then you probably don't know anything. But you don't give yourself enough credit, and that's another human condition, is as you're trying to learn something, you're just focused on the results, and you're not focused on that you actually get it, and you're just thinking about the right and the wrong. and maybe your ability to tell a story stinks, or maybe your ability to get out of winners stink, or maybe your ability to manage. There's some other factor. But one thing to remember is, just like a golf swing, you change something very, 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 very slight, and it could change the whole trajectory of your shot. That's good in the sense that you're close. And these are the guys that might be struggling. And I can't get into specifics of each guy or anybody like that because, again, this is a one-to-many program, not one-on-one. So there's a lot of good stuff. What I wanted to do with this meeting, and this is the reason why I'm going on and on and talking, is, I get a couple emails from people that early on in the edge, and they said, hey, this is good stuff. I like it. So you understand, but I don't know how to use the footprint yet. Well, I wouldn't expect you to. And you got to review some of the numbers. You got to be able, if you can't explain to me after watching some of the videos a few times, the numbers on the right are aggressive buyers, the numbers on the left are aggressive sellers, and so on, well then, that's part of it. You got to understand that. It's got to be back of your hand. That's why some of the videos are called back of your hand moments. If you don't understand this, then you got to keep watching that video until you could teach it to someone else. They're short videos. They're 5-10 minutes long. I don't know which video it is. It's one of those titled in track 3, back of your hand. If you can't explain that to someone else, you got to keep watching it and not trade till you can explain that to someone else. You're not going to understand order flow unless you understand that completely. That's number one. Number two, it's a lot to go through the videos. If you're just starting recently, you got to go through a lot of videos in track 4 now in the coaching section. You got to go through all that stuff. It takes you a long time, but it's worth it. Instead of watching TV, watch that stuff. But do the exercises. Execute. Lose money in a sim environment. People want to make money in a sim environment, testing a strategy, and then they say, but it's only sim, and then I go real and I lose money. Well, that's because you're not using it the right way. Lose money in a sim environment. Switching around. Purposely lose money in a sim environment, and then a real environment you make money. That's what the exercises are for, to lose money in a sim environment, to keep hitting bids and seeing them not go and get the hell out, to be able to trade an area instead of maybe a price because you don't want to scalp, fine. Trade an area. When that area gets violated, get the hell out. If you're having problems doing that in sim, you're going to really have problems doing it with real money. If you have small problems trading out of losers in sim, you're really going to stink when it comes to real money because you can't even admit that you're wrong and it doesn't count. Imagine when it counts. You're going to curl up. So flip things around. We're going to get to, we're transitioning this whole course. Not transitioning, but we reached like beating guys up on execution. There's a ton of content for that. And now we're going to get into how to create a better bias of which to execute. How to create a better bias of which to execute. The market's talking to you. If the market could talk, what would it say? Janet Yellen said, we're on live for a December cut, or a December hike, rather. That's in a little less than a month from now. That was a week and a half ago. The unemployment report, which she might have even had when she gave that testimony, was way stronger than expectations. That's what the Fed is mostly looking at in order to time their rate hike. Initially, the markets don't want a rate hike sooner rather than later, so we had to break and sell off. Then all of a sudden, yesterday, the story you start telling yourself is this, and I'm not going to show charts. I hope guys could just stay in touch and listen. The story it was telling you yesterday is once it got through 30 even, after a couple tests of swing highs, it wasn't going to hold forever. It told you that that spike low from the Paris attacks the previous Friday was overdone. And what it did was it really shook out a lot of longs that wouldn't have got shook out had those attacks not happened. We wouldn't have spiked to 1998 half. The fact that we came back, opened up, rallied, had some good upside momentum, at some point when it got through where? 30, it was bullish. You could have sold it and been wrong and made money if your executional locations are good, and that's a big part of executing right locations, picking the time, picking the spot. But the intraday story was they shook out a lot of longs. What does that mean? Well, you should know from previous recordings or previous tapes that means shake out a lot of longs. There's less sellers. It's easier to go up. That wasn't, I'm not trying to make it sound easy because that wasn't easy to see in the first hour or two. But once we got through 30, it was easier to see. And that's one of the ways to create a bias is they keep having these swing highs they're testing, they're going through on bullish. That's one of mine. That's if there's no way we can't, it's like one of those, I will throw a monitor out the window if I'm wrong. Because it can't, and that's fine. If I'm wrong, I'm fine. I'm good being wrong here. It just cannot keep testing this swing high and not go through. That's one way to build a story. I'm bullish because it just keeps testing the swing high. It's got to go through it. I got to pick a good location. And maybe you got fundamentals behind it. I don't know. So I'm reading a book, and so far I like it. And I'm going to introduce it to everybody once let me finish it and then tell you more about it. And I think you guys will like it. I really do. All right, so let's get going with what story is the market telling you? Not telling me and I'm telling you, telling you. George, you here?
Yeah, I'm here.
All right.
Hold on one sec.
Hey, and if you notice, what happened here? If you notice, take your time. If you notice, I put this guy in the middle of the journey. Big part of the journey was execution. Now we're getting into building the bias. There was some purpose behind that. But I can't seem to get to my next slide. Here we go. All right, George. You win something?
Hey, yeah, I'm trying to get out.
All right, take your time.
Get out. 50. I'm out. What?
All right. So these stories, I'm going to type them in as we talk about them, and just make this like the workshop I talked about instead of just a pre-designed presentation. Keep people involved. I don't care if I get a little mad if nobody contributed, but I don't expect everybody to contribute at all. But if nobody gave me a story, we would have ended the meeting because it would have been like, what am I, this is a prop firm and guys are coming in here trading and they can't tell me what story they're looking at. But guys have filtered in and made that happen. Give me a story, George, that you like to talk yourself through, not execute, but say, well, I'll let you talk.
Well, today's a good example. Coming into the European close, there's definitely a pressure building on the 60-50 high. And if the story was, well, if the European market closes strong, we'll probably take out that high. And then, but then it's like, what happens after you take out the high? And the high at the time kind of got rejected. So then, because of that rejection look of the high, and a couple big offers came out, you can have a little bit of a bearish bias to backfill some of these POCs on the Delta chart. Then overall, you got to understand, yesterday was a very, very bullish day, and so don't be surprised by continued upside, but at the same time, you can kind of expect a little bit more of a two-sided type trade. After yesterday was so directional after it broke above 30. I mean, I could go on and on.
No, keep going. I'm typing them in as you're saying them. So yesterday's price action, follow through or not. That's a good one.
The overnight was stronger. You kind of gapped higher, but then in the back of my mind was Labor Day when you gapped higher and you didn't go higher. So,
you mean Veterans Day?
Yeah, Veterans Day. And so at the Open, I was aware of that. I'm like, well, they're going to do a little repeat action. They kind of did at the Open. And then, typically if you're going to stay bullish, you don't really dig into the overnight 24-hour lows too much, and it didn't. So that kind of started giving me a story to the upside. And then we're watching crude oil, and crude oil got a little stable at the time. Right now it's breaking down. I mean, the story now is like, I'll tell you real time. It's, I think you got you're gonna probably have some long liquidation. As crude oil breaks, the bonds start rallying, the euro currency turns. Um, the high action today reminded me exactly the same as another day that sold off. Kind of there was like a flurry of quick selling, and then there was big offer chasing market lower, and then they did wiggle it, and then you have the retracement back up because you still got short stuck, from below. They're praying to get out, and then you got some bulls stepping on the gas, and they're like, well, we're going to work through this, and then a couple other factors change, and all of a sudden, you can start wiggling to a little bit of a bearish bias. And, that move to the upside earlier probably wiped out a bunch of shorts, so you got less buyers in the market, and you're just left with a bunch of profitable bulls. They're watching this crude oil tank lower, and, it's making them concerned. But they are profitable, so, because they are still profitable, you definitely have some built-in sellers. I mean, there's a story right there. But, to get it going back to the upside, I got my eyes on 58.75, and, as long as you stay below that, you got lower levels that potentially could get hit. And then I look at my market profile, and I got singles all the way down to 53. Then I start sizing up the risk reward. Well, if we come in at 54 and I sell 57.75, this is just an example, and I got a risk above 58.75 to like 59, is that a risk-worthy trade? Yeah, it's 3-1. I mean, it just goes on and on and on.
Well, no, these are good. That's a good start. All right. In the way I just typed in your titles was rejection on highs and lows, how when a high is put in, a quick rejection, it really gets people who bought it late. Let's say if highs were just listen to this for a second. If it's highs that's rejected, people who buy it late are mad because they just took immediate heat. They missed it all the way up. When they finally buy it, it doesn't go. If it comes off quick off a high, you usually get short saying, damn it, why didn't, or I'm sorry, what you don't get, you get the previous longs that had money into it saying, damn it, why didn't I cover? So that gets longs upset and anxious that have profit into it. Anxious longs means more selling, and late longs who didn't get paid and immediately got stuck are also selling. That contributes and creates that rejection. So rejection of highs in that example or lows is a good way to say I'm bullish or bearish now on a fading mentality. After that, he talked about yesterday's price action with follow-through or not. Are we going to continue to be up and maintain the strength we had in the second half of yesterday? Overnight gaps and how the open reacts. Like that Veterans Day, we gapped open higher, went down, and kept going down for a while. Today, we went down quick. We stayed lower, and then there was a fight. It was anybody's ball until we rallied through that transitional moment. But how the overnight gaps kind of get played out after the open. That's a good way to create a bias. Pattern identification from previous sessions. Like, I seen this movie before. That's what a guy I used to trade next to said. I seen this movie before, right? And so that's another way to create a story. Again, it's a pattern that you're seeing that you talk and walk yourself through. And then your story or bias is meant to be your story or bias is intact until X happens. So as George is saying, he's bearish until it gets above 59.5. That's a good way to know when the bias should change. But, hey, I'm bearish because of rejection of the highs, and I'm bearish until X happens. Now you know, and you can put yourself in a better position to know when to change that bias and at least not hang on to it. You don't have to go from bearish to bullish. You just go bearish to neutral. Make sense? So let me go through some of what other guys have said is there. Let me go over a couple of mine. Number one, herds, where they stuck. This could be confusing because it could go across small, short, medium, and long time frames, right? You can't just look all the time at where short-term guys are always stuck and trade on that unless you're very nimble and look to scalp. But you're always getting a sense of, hey, there's a lot of stuck shorts. We're going up. I'm bullish. That created my bias, okay? Magnets. You guys that don't figure out where the magnets are, it's not my fault, it's yours. I can't lay up the alert levels, but I will say to Edge members only, which is all you guys, if you figure it out, I'll tell you you got it. Those that have, love it. And that's not my words, it's theirs. Tom, are you here? Tom K? Do you have your mic set up or no? I'm going to open your mic for 1 second. Just give me a yes or no. Has the alert levels helped, once you found them out, helped you trade?
Yes, definitely.
Yes, definitely. All right, thank you. So this isn't like propaganda. So my point is those create magnets. You're like targets. When you hear me talk in the trading room and I say, we're going to here, there's either a big order in the book or stuck longs or shorts. Those are your best magnets of all. And they create a great bias. Like if there's a lot of stuck longs above, open position shorts above, we're going there. We're going back up. Be bullish. If there's a lot of shorts with profit into it, be bullish, but wait for a transitional moment back up. Those are a couple. There's another that I had, and that are these swing, and this is good for you guys that want to trade medium term, swing highs or lows that are always highs or lows that are tested. They're only going to get tested so many times. And that's the point I was trying to make today where I think, what was that price that we finally got through it? They're only going to get tested so many times. And then they're going to, well, heck, let's look at it. These swing highs, just be real simple here. Really, really, really simple. They're only going to get tested so many times, and I think it was these two guys right here. Shoot. Let's go to a pen. See these two? 52 and 52. Third time is usually the charm. And when we had a transitional moment right in here, you could say, I'm bullish, and we're taking that out. When it swipes through an open or a close, something that was obvious, that's another great bias builder. When you swipe, I don't like the word swipe, but when you just slam, when you slam through, the word is when you slam through obvious. Well, let's not use obvious. I have trouble spelling that. When you slam through where here, the fifth graders are bullish or bearish, right? So fifth grader support and resistance. Why? Because let's just do it. When you slam through fifth grader support resistance, because it's obvious. If a fifth grader has it, it's obvious. If it's obvious, then everybody has it. And when you slam through it, that's a way to tell the story that we're going up. Like a POC or a target that gets achieved and they run through it, and you get all these dopes, all these proficient profile dopes that think they're experts because they just know profile really well. What happens? Well, they all get short. It's resistance, and there's a lot of shorts, and they took nothing but heat. Bullish, right? Bullish. That's a story. All right, let's go through some of the other stories, and I won't name names to embarrass anyone unless it's Carl. Carl uses daily ranges and overnight ranges. If we get out of that range from yesterday, that tells me we are bullish or bearish. Okay, that's good. Previous ranges, right? Getting outside of them. Next, another rejection one. The opinion changed when price was rejected, not rejected so hard that still be upside pressure. He's still bullish. I also try to look at the structure of the market and have been trying to see if there are multiple clues in different markets to draw them. That's good. So it's like confluence in other markets. You got to be careful with this. I'm going to tell you that in a second. Confluence. Good one, Carl. Shoot. I deleted Rogers. And Roger, you had a good one. Could you repeat it? I read it earlier and I just deleted it on accident. It was a good one, though. Please repeat it. Dan says he's looking when the bonds are in asset allocation mode, which means opposite stocks. He's looking for the bonds to go to the VWAP as, let's say, resistance, and the ES does do the opposite. Now he's bearish. So it's don't tell me that happened. Just erased everything I drew. That's all right. Let's continue. We got it recorded. Now let's put this as well, I think we could stay with this confluence when you get and the reason why I want to be careful with confluence, I want to cover this in a second. Roger, please put down your thing because it was really good. I was impressed by it. An opposite market is doing what you want it to do, but you got to be careful. Let me cover that in a second. Another one, looking for movement away from a balanced area of price. Generally, some type of Fibonacci. While I'm not a big fan of Fibonacci, other than the fact that he was Italian, if you're using good executional skills, everything works better. So he's looking for a move away from a balanced area, generally some type of Fibonacci. This is generally an area where if we break out from value, buyers see no value and sellers see much value. This could be done in any time frame. So if you break out and the sellers seem to jump on it, then you're bearish. And why? Because the buyers got stuck. You just shook out a bunch of old sellers, old shorts. Another one. What did I say? With out of balance. Here's a guy who likes to buy pullbacks to support or sell resistance. He looks for the NASDAQ and the DAX to let me know if I'm right. That's more, Patrick, of an execution. But he lets the move dictate his opinion and then looks to buy a pullback. So move first. Buying the pullback is the execution. Move first is the story. Looking for that rejection like a 63.5 and quickly down. Zane says what George also mentioned. But don't follow that up with watching if there's a lead in the DAX or oil. That's the way to execute. And I want to get into, because Tom mentions this, and it's really important, and I think it'll help a lot of people. If you're using just market relationships to create your opinion, you might be late. What do I mean by that? Well, you'd rather use it to get in your opinion. If the DAX rallies and you're bullish, you're probably too late. It already ran up. But if you're bullish already and the DAX runs up and you buy it, that's a way to kick you into the trade. So you got to be careful with ancillary markets and trying to create the bias, but helping you actually execute it. Or the opposite. So you get the strong NASDAQ and a strong Russell, and the ES is lagging, and it could be kind of like, it's not obvious. It's obvious to you, but not obvious to the rest of the world because they don't even look to compare and contrast that way. That's a story to create a bias. Now you have to execute it, which means you're bearish because the other ancillary markets are strong, and yet you're not. Finding the leader and trading the lagger is a way to execute. Yeah, you could tell a story and do it all in one. That's an execution. Tom has a good one. Tom K has a good one. Target is 150%. If the price breaks the initial balance and then retests it, enter order with a target of 150. So he's bearish if it breaks the bottom of the IB and retests and holds. Good story. Zane, if you were in the actual meeting and we had a timer on you, it would go off. I know Zane a long time. I could say those things. So Ken's got a good one. He's been trading the FTSE lately on the open, how it looks from last close prior to cash open. What's it doing at the open? Who's in charge? And what are the other markets doing? Good volume. Where is it in profile terms? Where's my toast? Or where he's probably wrong. Same on all markets, he guesses. So he's looking at previous close and if there's going to be some sort of follow through on the open to create his bias. That's not bad, Ken, and I know you understand it better than it being kind of general in what you said. But a good way to build a story is how the open reacts. So that's the title, how an open reacts. Jay says, been studying Forex, but he'd like to trade with order flow. Well, studying Forex is great, but I'm going to tell you my 100% reaction to anybody who's went from Forex to futures, wish they started in futures. Forex is not as transparent as futures. There's a lot of different rigging that goes on in futures, or in Forex rather, that you don't get in futures, and more transparent, more of a regulated, centralized market than Forex is. Sometimes you can't even buy an offer that seems real in a Forex market. It's really controlled by the banks. But order flow could also just be in and of itself. It's so powerful when used correctly, could create your story. You see buyers that keep coming in, or you see buyers that keep coming in and the damn market can't go up. I'm bearish. So order flow with I'll put this as a separate title. And I think, Ellen, you mentioned it. It's almost like what should happen but doesn't is a great story. That you could put under economic number, right? We should rally, we did, and then it comes back through where we started. That's a good bias story, or a good story to create a bias. Jan says he looks at different time frames to determine where they want the market to go, put their targets in the charts. Then I look at real-time clues to get an unbiased opinion of who's in charge and which target the market more likely will achieve first. So that's kind of like a magnet. He tells the story by having good targets. A good trade is the ability to recognize the direction early and be able to hold on to some. Good trade for him is the ability to recognize the direction early and be able to hold on All right, let's get rid of some of these so I can get down to the bottom. Jeremy looks for sitting orders where people got left behind and have resting bids or offers. The market always goes to the orders. This keeps erasing my thing. That's sharp. Never seen that happen before. Big order magnets. They don't always work. Nothing does. But if an order's sitting there and the market knows about it, it's not afraid. It's going to take them out. Ellen says, profile structure on previous days, elongated with single prints and anomalies to unstable. And there you go. It's like if your magnet's a thin spot because a lot of people are going to draw or its value, it's got to get up to a certain spot because there are a lot of open positions there. A great way to, I'm going to give you guys a tip. I'm going to give you a tip. And it's not like it's holding anything back, but the one thing about alert levels is, I just can't. I'd like to just tell everybody here's what they are. It's the only thing I've ever held back, and it's because it's for your own good. If you figure it out your own, you'll use them better. But I'll give you a tip. Those are open positions. All right. Roger said something that was great, and he kept it really simple. Pick up in activity in one direction. So a momentum move in context with things like George's set up with the delta charts. So you get a big up move. Think about this for a second. You get a big up move. All right. It's going to create a bullish bias, but you can't just buy it. But if the market comes back down and it's got some stuck short still in it, now you're bullish and you're looking now to execute. That's a great story. Let the market tell you it's bullish and then just sit back and be simple about it. Hey, we rallied. It's bullish. Let me find a place where I'm in a good location and I know where I'm not going to be bullish anymore. The rejected high is beautiful today. How it rejected the highs that we put in, and we come out and it set the pace for the downside. We'll keep working on that, Tom. I like it though. That's what you need. Repetition, something to build on. Well, that's the thing. So here's where someone's being a little disoriented and looking at too much. He says, big sellers and the market doesn't go down, so you're bullish. I like to use that also as the way to get in and if you're already bullish. But then he'll look and see that the NASDAQ isn't confirming, the DAX is sideways, and the bonds are rising, conflicting signs. You're looking at too much. Then you should put the book down, right? You're looking at all that stuff, and you put the book down. There's no story. There's no bias. Remember the most important thing of all, you don't always have to have a bias. So we're talking about how to create a bias and some of the stories that you tell, but bottom line is, and this is what's most important, you don't always have to have one. You get confused and then you don't need one. Now let's go to the charts a second. What I'd like to do, who in this Edge group just signed up within the last 2 weeks. If anybody comes and says, I don't like, the back of your hand lessons have to be understood so you could reteach them. Secondly, and in the trading room, we talked about this in real time, how this area, this transitional moment here, guys, was just purely an about face. This is also a transition to tell a story. I'm bullish. The tempo, it's not that it just happened there. It's all the other contexts, like it happened in oil. It happened in the NASDAQ. There were targets to take those 52 evens out, right? So it was like when you do an about face in multiple markets and have a transitional moment and the third test to a swing high, which was 52 even, which was just right in here, that's like that rush of adrenaline because you see the finish line. And that's what the bulls had in that moment across all ancillary markets. That rush of adrenaline because they seen this finish line, which was 52 evens. We're going through it. That was the charge for bulls. That's telling the story and then following up with execution, kind of right in one. There's a lot of stories where you develop where the execution actually is the story. But work on what's comfortable. Talk yourself through the story. Don't get anxious of where to buy it, where to sell it, because you got those tools. You don't realize it. You got those tools. Now we work on what you're comfortable, how you tell a story. And to work on it, do the exercise where it takes you back to this. And you go through one rotational bar at a time. This is a powerful exercise because it's not going through each bar that's a 5-minute or 15-minute or hourly where there's so much rotation that happens within those time periods. This is a rotational periodicity. Get good at telling the story. Say, I'm bullish because of fundamentals that came out this day that were bearish and we couldn't sell off. And you don't realize it, but that's your executable moment. That's your trade. Know where you're getting out before you get in. Cleaning up these stories, though. You guys have it. The last thing I wanted to do, and I'll stop the recording to do it, to go over and add to it, is just reiterate. And this is for people that, by the time someone watches this on a recording, they've been through a big chunk of the material. But for those that are in here live that just come into it in the last couple of weeks, the back of your hand videos in track 3 are important. Some of the exercises in track 4 are important to help you understand and get it. This isn't a pinpoint strategy, though, and I think you guys understand it, that's going to hold your hand and tell you exactly where to get in and out. This is the way to create and execute an opinion using where people are stuck. That's the skill. There's not a skill in having an exact A, an exact B, and an exact C laid out for you. Not that anyone's saying that or anticipating that or wanting that, but that's the key. These sessions keep getting attended at a very high rate, so I know that they've been good, keeping people together. The team room is available for guys that are here. If you don't have access to it, email me at edge.marketdelta.com and just say, I would like access to the team room. I usually like guys wait a couple weeks to kind of get understanding a little bit of the content and then jump in. The whole point of the team room, though, is to listen, talk, but It's just introduce yourself and listen. Sometimes the team room is quiet, just like an office is. So if you go in there and you only want to be in there for 1 hour a day and it's quiet, well, it's like anything else. You go into a real prop firm venue, it's not lively every minute of the day. And read the instructions in the email. Just go through it. It's the only time you have to do it. It's really simple, but you got to read it through. I could do it. You could do it. Just read through it. You download the little client, and you get yourself access to it. And it's so simple to get in after that. But read the instructions. If you don't read the instructions, it will be difficult. Dave put together a nice document that just walks you through it. And then there's guidelines and rules in the team room. I know what a professional prop office sounds like and looks like. And that's what we're replicating in the team room. Ken, hang in there. Hang in there. We've got Europeans coming. Ken is always in there at 1 o'clock Central Time in the a.m. What time your time, Ken, do you get in there? Ken is from the UK. Jim is from the US. Two of the older guys in the Edge. They met each other in Boston, 1776. 7 a.m., so that's 1 o'clock my time. So 1 o'clock Central Time, Ken's in there opening up the European session. Has there been good opportunity from 1 to 6 or 7 to, let's say, 10 or 11 your time, Ken? Ken says, yes, it's good. Ken's trading the footsie, you said? He's trading, but he's watching the ES. Ken is one of the original members and early adopters. It's going to be quiet in the team room outside market hours, outside U.S. market hours, just know that. But as we build more of a European presence, there'll be more people in there early. All right, so this is a good question. Can I distinguish between a story and a trigger? Can I distinguish between a story and a trigger? Sometimes, no. But let's go to blue screen. Sometimes, no. But let's show you, for instance, one on a more helicopter or plane view, Tom. So the question again is, can I distinguish between a story and a trigger? When Yellen starts talking about December being a live meeting, that's a story to get you bearish. It's not necessarily the trigger at that moment. You got to wait for transitional moments. When the unemployment report comes in not only bullish, Tom, but really bullish, and we rally and come right back and go through where we started. So if we started at this zero line when the unemployment report was released right in here, okay, and we rally and come back through where we started, that's a place to say that's a story I'm bearish. Not necessarily a trigger down in here, but start telling yourself the story. If you have another line in the sand, let's say good old-fashioned profile looks like this and it's a great target, and the market comes down and you get people getting long against it, find a place of support for profilers. And if it does that right through it, that's the story to tell you should be bearish. Not necessarily execute it down in here, but the difference between the story and a trigger. A trigger uses thin spots. A big seller comes in and you're all here. So this is the story right in here. Goes through some really fantastic support. Then the market retraces. The trigger is a big buyer comes in right in here and it can't go up. You're already bearish because of this moment. You got to pull back, and you got the moment where some stuck longs are stuck. And then that's the trigger of the bias. And I really, I front loaded this edge course with learning this. Because once you learn this first, it'll be easier to execute because you already know how. If you learn the story first, the harder part is executing. And anybody who's traded for 5 minutes or 5 years or 50 years knows that. The toughest part of this business is actually trading the bias, attaching opinions to the bias to get in to get out. So learn that first, and then create better stories. And there's not necessarily a story that's better than another one. That's sometimes subjective. Like, it's better for you, but I don't really like that. But yet, it still comes back to location. Does that answer your question, Tom? The story doesn't get you long or short. It just gets you bearish or bullish. And there's two sides to every. There's a lot of times two sides to every kind of process. Here, I'll do it in your terms, and you'll like this one. Ready, aim, that's pretty much the story, and fire is the trigger. So you find the story to tell you when to get ready. You're getting close. Execute. Ready, aim, fire. Sometimes if your story is wrong and it's really the bulls are in charge, you could pick good locations, but you got to be nimble to get out in a good location. And you're the type that takes big winners, so you're going to take big losers, I would imagine, when you're wrong. You want to drill down. If you're not having success with big winners versus big losers, drill it down. Don't look for big winners anymore. Cut your losers, because then when you're wrong, you're not wrong for a long time. And the bigger the loser you take usually, and the longer your hold time, if you're not having success being right 50-50 or 60-40, then you're just living being wrong too long. You got to cut your hold times. And that's all that matters is marked progress. And that's what you're having. All right, that's going to end this on the recording. A couple things I'll add for that's more relevant real time for you live guys. This will end the November 17th session. You guys watching in the future.